Hello and welcome to another episode of the Mark Moss Show, where, of course, we talk about the decentralized revolution each and every week, the way the world is changing, and it's changing rapidly right before our very eyes. We look at it through the lens of politics, finance, and technology, and, of course, that technology is Bitcoin. It's the decentralized revolution that is changing the world. Now, we got a big show to cover today because there are big things happening in the cryptocurrency market. Well, it's a big thing happening in the world, a big thing happening in the markets, and there is big things happening in the cryptocurrency space. And it's important to understand what's actually happening because it's like a microcosm. It's like a little model that we can see and we can understand easier, and we can see it happen in much shorter time frames. But it's exactly what's happening in the bigger financial system, and it's exactly what's happening in the bigger global landscape, what's happening to other countries, and will eventually happen to the United States as well. And so if you can understand what's happening here in the crypto space, which you should, then you can understand everything else. So we got a lot to cover today. I'm excited to get into this. I am wearing my HODL shirt today. I've broken from my normal uniform of a black shirt to represent my HODL shirt because that's what we need to do today. We have to HODL. The price of Bitcoin is plunging. The cryptocurrency market is plunging based off of the news that I am going to unpack for you. So let's jump into it. What am I talking about? Well, another one bites the dust. How about that? How's that for a title? Another one bites the dust. And I am talking about another pillar, a giant in the cryptocurrency space is done for. Game over. Now, we've been talking about this for a while, this kind of domino effect that happened. And really, we saw the cryptocurrency markets plunge, Bitcoin plunge, cryptocurrency markets plunged when Terra Luna, the stablecoin, broke. And I'm not going to go through all of that again. Hopefully you remember that. If not, don't worry. You can go back and check it out on the podcast. Just check out your favorite podcast player for the Mark Moss Show, and you'll find those episodes. But we saw Terra Luna, which was this algorithmically programmed stablecoin. It was a horrible idea. And they were trying to keep this pegged. So they created their own token from thin air, and they were trying to keep it algorithmically pegged at dollar parity. And then they took a bunch of the money that they had made from selling this made-up token out of thin air and put it into Bitcoin. When it all started to come apart, when the peg was being broken and their made-up token started losing value, they were forced to dump all their Bitcoin into the market, and it brought the price of Bitcoin down. When the price of Bitcoin came down, then it created this domino effect where then we saw Celsius go down. We saw Three Arrows Capital go down. We saw Voyager go down. We saw BlockFi go down. And it was like this domino effect. It was pretty interesting. Now, I said at the time, and I'm going to unpack for you again, that pegs are always meant to be broken. If somebody is trying to artificially engineer value, trying to artificially engineer the way the markets work by creating this arbitrary value, pegging it. But that's not how markets work. Value is always subjective. People say, well, there's no intrinsic value. You got the Peter Schiffs of the world saying that Bitcoin isn't like gold. Gold has intrinsic value. Bitcoin doesn't. No, that's false. There is no such thing as intrinsic value, period. All value is always subjective. It's always subjective. I've given you examples of that over and over. And so the problem is when you try to engineer value, when you try to gamify it, when you try to force it, like fiat currency. A lot of people don't really understand what that word fiat means. It's a new word. As a matter of fact, I credit Bitcoin for bringing that word fiat back to kind of the mainstream. Fiat means by decree. So all things have value because we believe they have value collectively. The market agrees that certain things have certain values. But fiat means that it's not up to the market. By decree, we give it value. And so that's exactly what happened with these pegs, is they try to, by decree, give something value. And sometimes the market goes along with it for a while, and then the market says, we don't value it anymore. Now, we see this happen all over the place. It's typically known as bubbles. So the famous one that people want to point Bitcoin to is the tulip bubble. And they'd say, they'd point to Bitcoin is no different than the tulip bubble. So back in Holland, I think it was the 1600s, in Holland, they have tulips, the flowers, and all of a sudden, for some reason, they started becoming more and more valuable. And certain tulips were worth more than others, and then it turned into a mania, where collectively the market started paying more. Well, then tulips went from this price to this price. So then people were like, okay, well, I'll pay more and I'll pay more. And the price of tulips went straight up like a skyrocket. And then all of a sudden, people figured out that they were just flowers and that they were valued way too high and nobody wanted them anymore. And then the price came straight back down. Now, one thing I'll point out is that very simply, look, I'll make the financial market super simple for you. That's my goal. Take these financial subjects, these complex financial subjects, and make them very easy to understand. And so, look, I'm going to make it super simple. It's not oversimplifying it. This is how it works. Markets stop going up when there's no more buyers. Also, markets stop going down when there's no more sellers. So in this example of the tulip mania, which, by the way, I didn't prepare this part. Tulip mania, 1636 is when it happened. And it happened over just a very short period of time. 1636, 1637. Speculation drove the value of tulip bulbs to extremes. At the market's peak, the rarest tulip bulbs traded for as much as 6 times the average person's annual salary. Wow. Think about that. 6 times the average annual wage, which is, in the United States, the average annual wage is $53,000 a year. 53 grand a year. So times 6. That's how much the tulips were going for. So anyway, as it started going higher, and then all of a sudden there was no more buyers. And they said, you know what? We don't think it's worth that. We're not going to buy it anymore. And then the whole thing crashed. And it never came back. So trying to compare Bitcoin to tulips is ridiculous. But the point is that the market collectively agreed that they would give it value, and they did. All right. Now, let's jump into what happened here. Another one bites the dust. So when you're trying to peg things, you're trying to create this artificial value, it always is meant to be broken. Now, the most famous example of this, well, real quickly, we're talking about, just so that you know, we're talking about the FTX cryptocurrency exchange. It's the second largest cryptocurrency exchange. I'll call it a cryptocurrency casino. That's what it is. It's gambling, and I'm going to explain to you why it's gambling. I know a lot of you guys think that crypto is this innovation and it's the hottest thing ever and it's going to be worth all this money. It's really a casino. And when I unpack and uncover all this for you, you're going to see exactly why. And Japan, Bank of England, and the ECB, and yes, even the United States is also a casino as well. Once I unpack all this, it's going to be super easy to understand. Before we get into the FTX, what happened, Sam Bankman-Fried, how he lost the second largest exchange, I want to rewind the clock just to give you a little bit of a better example. We're going to go through history. I know you love it when I give you a history lesson, and I want to go back to the story of George Soros, everybody's favorite villain. Certainly not my favorite guy, but it's an important story to understand. How did George Soros get so rich? Well, he was a trader, one of the most successful investors and traders in history, by the way. But he got famously rich by making $1 billion in a single day back in the 1990s. Now, $1 billion was a lot more money back in the 1990s than it is today. And so he made that in a single day. And how did he do that? I'm going to give you this story real quick about George Soros and how he broke the British pound. And so what happened is, again, all value is subjective. All value is created by the market. Whenever you try to force it, that's when you create the problem. So the British pound, so all these countries in Europe had their own currencies. So in Britain they had the pound, in Germany they had the mark. And what happened is the British pound was shadowing the German mark in the 1990s. Even though the two countries were completely different countries, they had different economical bases, imports, exports, all of that. At the time, Germany was a much stronger country at the time. And they still are today. But the UK, they wanted to keep the value of their pound at 2.7 marks. So you could always exchange 1 pound for 2.7 marks. They picked that number. That's an arbitrary number. They decreed, fiat, by decree, we say that 1 pound is worth 2.7. But the market doesn't always agree. The problem is that in Britain, they had very high interest rates. and they had equally high inflation. So the value of their dollar was going down. Their dollars, the pounds, were buying less and less goods, right? When you hear about inflation, the Fed's trying to fight inflation, that means they're trying to fight prices going up, the cost of gas, the price of homes, the price of food is going too high. It's not that the prices are going higher, it's that the value of the dollar is going down. So it takes more of those dollars to buy those things. So those work in opposite. So what happened is in Britain, they had high interest rates and they had high inflation. But they also demanded that, remember, that the pound exchanged 2.7 for 1 mark. They had to do that in order to enter into something called the ERM, and its exchange rate mechanism. So the European Union, the EU, was forming, and they were trying to figure out how all these countries could work and how these different currencies could be exchanged for each other. So Britain wanted to enter into this ERM. Now, many speculators, gamblers, traders, whatever you want to call them, George Soros being one of them, he wondered how long could these fixed exchange rates really work? How long could they fight against market forces? And so speculators like George Soros began to take up short positions against the pound. They were basically saying, look, we don't believe that it's worth 2.7 marks. We don't believe that. And we can see that you have high inflation, high interest rates, and we know that it's not worth that, and we know that it's going to drop in value. The pound will lose value. So we're going to bet that it's going to go down. Now, what happened is, so they're selling it short. They're trying to push the value of the pound down, and the UK didn't want that to happen. So what do? Well, they try to defend it. How do they defend it? Well, they start buying it. So Soros and the speculators are selling it down, shorting it, and the UK is forced to buy it to try to prop it back up. And what they did is they raised interest rates to double digits to try to attract more investors to buy the pound. So, hey, right now, if you put if you buy dollars from the U.S. Treasury, they'll pay you about almost 5% right now. And so that's attracting more investment capital. People are like, well, shoot, I'm losing money sitting in the Argentina peso or the Turkish lira or the peso, whatever it is. So we'll put our money into the dollar at the Treasury, we'll make 4 or 5%. And if they continue to raise rates, more and more money will come into the dollar. So that's exactly what the Bank of England did or the UK did. They raised interest rates to double digits to try to attract more investors to help buy up the pound to fend off the attack of George Soros and the speculators. Now, what happened though is now they had to pay out all this interest expense, right? They raised rates to attract investors. The investors came, but now they had to pay out the money. But the British government realized that it was going to lose billions of dollars trying to artificially prop up the pound. So after trying and spending billions of dollars, they gave up. Basically, they had to withdraw from this ERM that they were in, the exchange rate mechanism. And when that happened, it plunged. They gave up the peg. They said, forget it. We're going to withdraw out of the ERM. And the pound crashed in value. And Soros and the other speculators that had all these short bets piled up, they made $1 billion off of this one trade. Now, why do I break that story down for you? Because that's exactly what happened with Terra Luna. With Terra Luna, it's exactly what happened now with FTX, and it's exactly what's happening in Japan, Bank of England, and will happen in the United States as well. So let's break this down a little bit. So you might know who Sam Bankman-Fried is from FTX. FTX, as I said, is the second largest cryptocurrency casino, or they call them exchange. Now, like I said, when this whole thing broke down where Terra Luna crashed, and then Celsius crashed, and Three Arrows Capital crashed, and Voyager, and BlockFi, the whole thing, Sam Bankman-Fried, the founder of FTX, came out as the savior. Everybody applauded him. Hey, he came out, he saved everybody. Congratulations. He was featured on like Time magazines and the Financial Times and all these articles that he was the savior. He was going to backstop everything. He was the smartest guy. He's like under 30 years old. He's worth billions of dollars. He's the smartest guy. He's going to leave all his money to charity. Now he's meeting with presidents and political leaders, and he's influencing regulations and all these things. So let's talk about this. So he started bailing out all these companies, and he committed hundreds of millions of dollars to that. In May of 2022, FTX CEO Sam Bankman-Fried has warned that more crypto exchanges are headed towards insolvency, but they're yet to be exposed. So he's saying, hey, look, there's way more crypto exchanges that are going to be insolvent or bankrupt, right? But we just haven't found that yet. Crypto billionaire has recently provided some hefty loans to bail out a number of struggling crypto firms. So, like I said, he was bailing them out. He was titled Crypto's Bailout King. People were starting to think like the Federal Reserve is meant to backstop the banks, and maybe FTX and Sam Bankman-Fried, which we'll call SBF moving forward, SBF and FTX will be like the Federal Reserve. They're going to bail out the crypto exchanges. It's kind of the same thing, right? Not really. He said, quote, there are companies that are basically too far gone, and it's not practical to backstop them for reasons like a substantial hole in the balance sheet. So he's like, look, we bailed out a few of these companies, but there's way more that are way worse, and we're just not going to do them. He bailed out FTX and SBF bailed out BlockFi, $250 million revolving line of credit. The quantitative trading firm Alameda, remember that name, we're going to come back to it, committed $500 million in financing to Voyager Digital. In May, Bankman-Fried purchased a stake in Robinhood, and they also acquired Canadian crypto trading platform BitVo, as well as Embed Financial Technology. So they're buying all these things up left and right. Okay, but then in July, SBF says that FTX has up to $2 billion for further bailouts. He says that FTX has a few billion on hand to continue assisting struggling firms, according to a Reuters article. But he said that he felt the worst liquidity crisis were now in the past. So, hey, I think we're past the worst of it. We did our best. We bailed out these companies. And, by the way, we got an extra $2 billion laying around if you want us to use any more. But this is only the beginning, and it gets so much better. And like I said, you need to understand what's happening here because it really is what's happening in the United States and Japan and everywhere for that matter. I'm in the middle of breaking down how the second largest cryptocurrency exchange just blew up. Sam Bankman-Fried, we call him SBF, and his exchange FTX, and they absolutely crashed. So he was the savior. He bailed everybody out. And he said, hey, we have a few $2 billion on hand, just in case anyone else wants to get bailed out, but we think the worst is behind us. All right, that was July. Now, this is important. So October 25th, just a couple of weeks ago, SBF, Sam Bankman-Fried, the founder of crypto exchange FTX, said, quote, no more bailouts. Interesting. So the SBF and FTX are looking to raise fresh funding. He clarified that the company, FTX, will no longer pursue bailout-type acquisitions. They're not going to do that anymore. On October 25th, Sam Bankman-Fried said FTX is planning a new funding round to raise capital. They wanted to raise $1 billion of capital at a $32 billion valuation. So, October 25th, a few weeks ago, they were raising $1 billion at a $32 billion valuation. Well, then, November 2nd, a couple weeks later, Coinbase breaks an article. And it says divisions in Sam Bankman-Fried's crypto empire, which is Alameda and FTX, blur on his trading titan Alameda's balance sheet. So what happens is he owned two companies. And let me break down how this works, how insidious this is. All right. I'm going to try to be a little bit vague, but I'm going to give you some examples. So FTX is an exchange where you can go exchange one crypto token for another. You can exchange your Bitcoin for Ethereum or for Cardano or Solana or whatever, any of the other 20,000 tokens they have on there. All right. Then he created another company called Alameda. And Alameda is what's known as a market maker. Remember that markets are supposed to be free. Remember that values are supposed to be set by the free market. But what market makers do is they get into the market and they buy and sell to push a certain valuation. So here's how it works. A market cap of Tesla stock or Amazon stock or Bitcoin or FTT token is all the same. You have the price of the stock or the price of the token times the total amount of stock or tokens that are available gives you a market cap. So if I created Mark's token out of thin air, I created 10 of them, and one person buys one of those tokens for $1, then I would say the market cap of Mark's tokens is now $10. Someone bought one for $1, and there's 10 of them in existence as $10. Now what happens is, who bought that one token for $1? Well, what if it was my buddy over here known as a market maker. So there's 10 tokens, and they're going to buy and sell these tokens to each other. They're going to buy it for $1, sell it to the other guy for $1.50, the next guy for $2, sell it to this guy for $3, $5, $10, da, da, da. Now the next thing you know, they're buying and selling them for $1 million per token. Now I have 10 tokens times $1 million each, and now my market cap is worth $10 million. But it wasn't done by the free market. It was done by the market makers. Now, the market makers, of course, get the free market to move, right? So the market makers start trading it. But when it goes onto an exchange, the other people on the exchange are watching this token go higher, 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 higher. So then the free market jumps in, right? Now, where is this free market of buyers? Oh, that's right. It's on his other exchange. It's on FTX. So let me give you an example. I know two people. I'm not going to say who they are. And they basically last year went to FTX, went to SBF and said, hey, we want to build our own token. What token do you think we need for the Solana blockchain? And SBF said, you know what would be really good is if we had this type of a token. I'm not going to oust these people because I know them. He said, if we had this type of a token, this kind of thing, that would be worth pretty good. And they said, great. If we build that, will you list it on FTX? He said, well, if Alameda, the market maker, my other company, if they'll take that project on, then yes, FTX will list the token. Okay, great. Would you set up a meeting? Oh, sure. So I set up a meeting with Alameda. They said, hey, Alameda, we talked to SBF. He said, if we build this project, you'll list it. And Alameda says, sure, we'll take it. So this guy I know, went and hired a couple of developers on Upwork or whatever and built out this whatever protocol, Solana token. And within a couple of months, and went back to Alameda and said, hey, okay, we built this project and we have it, and do you want to take it? And they said, sure. So I forget the exact details, and I don't want to give you the exact specifics either, but basically they said, we want 30% of the tokens you created. There was like 100 million tokens that they created out of thin air. So he created this project to be this token on Solana, created out of thin air. We have 100 million tokens, and we're going to give Alameda 30 million of those, 30% of them, in exchange for $12 million cash up front, plus we're going to get other tokens they're going to give us, and we're still going to keep 70% of the tokens. So then Alameda and venture capitalists love this because they just got 30 million tokens up front. They automatically turn around and sell them for 3 times, 5 times, 10 times higher than they just paid for it. So they instantly make money. They sell it to venture capitalists, and then they set the market, and it gets listed on FTX, their other company. So Alameda sets the price of this in the market by buying and selling it, and then on FTX, they release it to the public with this newfound price. The public thinks that this is the market valuation because the market maker has artificially gotten the price there. And then FTX makes all the money from you, the public, buying and selling these tokens. Now, these two projects, both built on Solana, two different people I know, launch these tokens, and then they walk away. They hired some developers on Upwork. They built the token. They deliver it over to Alameda and FTX, and then dust their hands off and walk away because it's a decentralized protocol. It's not a company. It's not a service. They don't need employees. There's nothing to do. They're not managing it. They're not growing it. It's just a protocol. We just built this thing, and here you go, and we walk away. And they got millions of dollars, tens of millions of dollars in their pocket up front. Alameda, the market maker, sold those 30% of the tokens, 30 million tokens, at 3, 5, 10 times what they paid. And then FTX makes all the money from you, the public, buying and selling these tokens, which is a bunch of worthless garbage. Now, you think that it's life-changing, it's world-changing. This company built this page, this white paper, and they built this website, and this new protocol they built is going to change the way that we interact with each other, and it's going to become so valuable, and look how much money I'm going to make. Little do you know that it's vaporware. It's literally nothing. Literally, somebody made this in 6 months with a bunch of remote people from overseas that just built it, and they sold it to you, and they pocketed a bunch of money, and now FTX is making a bunch of money for you buying and selling it, but there's nothing there. It never will be anything there. There's no team there. There's no development going on there. This is what Sam Bankman-Fried, FTX, and what Alameda are doing. This is the model. Now, Where did they get all the money to do this? That's the other part. So FTX, the cryptocurrency casino, the exchange, created their own token called FTT. Now, if I buy this FTT token, that allows me to have a discount on my trading fees. It's sort of like a club, right? Like a rewards. Like when you go to the grocery store and you sign up at the grocery store and they give you a discount when you put your phone number in. It's like that. So if I buy the token, then they give me a discount on my trading fees. But most people bought this token because they thought it would go up in value. So they create a bunch of these tokens out of thin air. They use their market maker company to set a price of those tokens, create a valuation, and then they start selling them in the market. Now, in March of this year, when Sam Bankman-Fried was bailing out the entire industry, that FTT token had a valuation, a market cap of over $7 billion. Today, it's worth almost nothing. But what happened is just a few days ago, this story broke on CoinDesk in November. I got sidetracked here. So in November, this story broke on CoinDesk, and they said that these two companies, FTX, the exchange, and Alameda Research, the market maker, they're both giants in the space. They're supposedly two separate businesses, but they actually have the same asset on their books. The balance sheet of Alameda, where they got all the money to go fund all these projects, like I was just breaking down to you, and now bail out all these other projects, the balance sheet shows that it's full of the FTX token, the FTT token that was created out of thin air and given a valuation by the market maker. It's kind of dirty. And what it shows when you dig in is that they have more assets on their books of this token, FTT token, than the token is even worth. So they were claiming about $8 billion, but the valuation of the token was less than that. The net equity in the Alameda business is actually FTX's own centrally controlled and printed out of thin air token. Wow. Now, they had other assets on their balance sheet, including $3.37 billion of quote-unquote crypto, like these other projects I told you about, where they take all these tokens, but it's basically vaporware. Large amounts of the Solana blockchain's native token, $292 million of unlocked Solana, $863 million of locked Solana, $41 million of Solana collateral, other tokens mentioned by name. So basically just a bunch of garbage. That's what they had. So all of a sudden, very quickly, everyone's like, well, whoa, wait a minute. I hold this token. They don't have any money. The bank doesn't have my money. It's called the bank run. And so what happened is that came out, and Binance, which is the largest crypto exchange, said, well, wait a minute. We're holding $2 billion of this token, and it's not worth that. And so CZ, he's the owner of Binance. He said that, quote, as part of Binance's exit from FTX equity last year, Binance received roughly $2.1 billion US dollar equivalent in Binance USD stablecoin and FTT, the token. But due to recent revelations that have come to light, we have decided to liquidate any remaining FTT on our books. So he's like, look, hey, we see what you did. You're a giant Ponzi scheme. You're a Ponzi scheme. You have no liquidity. We're not going to hold this on our books. We're going to get rid of it. Now, what's interesting about this is that when you want to move that much more, he says, we will try to do so in a way that minimizes market impact. Due to market conditions and limited liability, we expect this to take a few months to complete. Well, when you're trying to liquidate a large position, you're trying to do it privately. Typically, you do it what's called OTC, over the counter, because you don't want to move the market. So big buys or big sells, you do it over the counter. Otherwise, what's known as slippage happens, and the price goes down in value. And so, but he didn't do that. He didn't do it quietly. He didn't do it privately. As a matter of fact, he announced it to the whole world what he was going to do, and very quickly, everybody else realized, oh, shoot, if he's going to do it, it's going to crash the price. How much am I holding, and how am I going to get my money out? And so everybody ran for the fire exits at the exact same times. Now, Alameda and FTX tried to stem that, and they went back and forth. The two CEOs went back and forth. And they said, hey, if you're looking to minimize the market impact on your token sales, the FTT sales, let us buy it from you. We'll buy it all from you today at $22. Now, what's interesting is when they gave out that number, $22, they basically told the market where the support line was, where their liquidation price was. CZ from Binance had no response. He didn't say anything. But by telling everyone he was going to start dumping the token on the open market, it started crashing it. So it showed that he wasn't really trying to get his money out so much as he was really trying to attack the company, which of course is his number one competitor. And I'll also say that Sam Bankman-Fried and FTX is hostile towards the cryptocurrency market. And I say hostile because Sam Bankman-Fried, SBF, is vocal about trying to impose regulations, onerous regulations, in my opinion, horrible regulations. Well, pretty much all regulations are horrible, but impose these on the cryptocurrency space. So CZ probably sees not only is he my competition, but he's also harmful for the space overall. So how about I'll just take him out? This is known as a speculative attack. It's exactly what George Soros did to the Bank of England, which is why I started with that. Now, since that's happened, we can see that the price of FTT token has completely plunged. Like I said, he offered to buy it at the 20, or they said, hey, we'll sell it to you at the $22 price cap, which is where they were trying to defend. And he said, no way, it's not going to happen. And within literally days, since on 11/7, on the 7th, it was a $3 billion valuation, and on 11/8, it's a $500 million valuation, just completely demolished. Now, I said this is also happening in the rest of the world. All right, so this is a small example. It's like a toy example of what's happening in the rest of the world. So let's look at the Bank of Japan. The Bank of Japan is doing the same thing. They have printed money. They've made the yen out of thin air. Now, the market collectively values the yen, and the country of Japan uses the yen. That's their currency. And they've assigned value to that. But the problem is that they're printing so much of it, it's pushing the valuation of the yen further and further down, which means prices are getting higher and higher. Now, what's happening is that their currency is crashing so fast, it's losing value so fast, that Japan is doing the same thing that FTX did. They're buying their own currency to keep it propped up, just like the Bank of England did to hold off George Soros. So the speculators are selling it short. They're trying to buy it to prop it back up. So the Bank of Japan is actively doing that right now. The problem is that at some point, they're going to run out of assets to continue to buy it up. And at some point, the people are going to go, look, we don't want to hold this token. We don't want to hold this yen anymore. We're going to sell it for something else, dollars or Bitcoin or a house or stock or anything, but we're not going to hold this yen anymore, just like nobody wants to hold the FTT token today. Now, Japan is just kind of like in the same situation as FTX, where they can't print dollars. They can only print their own currency. So FTX could make more FTT tokens, but nobody wants them. Just like Japan can make more yen, but if nobody wants them, it doesn't matter. They're not dollars. Well, the Fed is also in the same situation in the United States. The Fed is also seeing the value of the dollar going down. It's buying you less goods and services than it did before. Remember, we don't want money. What we want is goods and services. I want energy. I want heat for my house. I want gas for my car, and I want food for my family. I want that. Money is only the proxy. Now, if the value of the dollar continues to fall, the government can print more of those dollars to try to keep it propped up. But what they can't do is print more energy or food. And at some point, just like what happened to FTT, the valuation of the dollar will plummet so fast that everybody will rush out and buy anything they can, any house, any stock, anything they can to get out of the dollar. It's what Mises framed up as the crack up boom. Now, it happened within days, 2 days to FTX, and it's going to happen over decades to the country. But we're witnessing it. We're living through it. We're seeing it happen right now. My guess is, just like with FTT, you want to get out before everybody else, before the fire exits gets jammed. And so this is your warning. Anyway, you're listening to The Mark Moss Show, breaking down the decentralized revolution, breaking down the way the financial system is changing right before our very eyes, how the cryptocurrency space is a microcosm. That's what I got. Thanks for listening.